Hey, what's up, everybody? I just wanted to give you a quick chart here. Kind of what I was looking at when I was looking at making the call to buy at 7,400, looking for a nice rally. Now, I do not believe it was going to rally as quick as it did, but it was very supportive in a lot of things I was looking at. And I wanted to kind of go over the chart that I was kind of following. Now, I got some other indicators behind the scenes, but I kind of give you the story on what I have here. Couple of things. Uh, a lot of times I look at trend lines and then the break points of the trend lines as support and resistance levels. So when we look back here, when this market was up in a bullish move here, and we're also going to look at the RSI really closely. Um, it's this break point right here. So when this market broke the trend line to the downside and made a little bit of a throwback or basically a pullback to the trend line, this point right here is new resistance. So you break this trend line and it comes back. That's a new resistance point. Now, one thing with the RSI, what I like to use the RSI for, and we're looking at broad trend here because this is the weekly. Nothing that we're going to really. I mean, I guess you could trade off of it if you're going to find really key spots to buy, but you're going to hold long term. But this is kind of the broad market of where I think kind of the inflection points of the market or areas that I think are going to be nice support levels or resistance levels that are going to kind of continue to either continue the trend or it's going to reverse the trend. But the RSI, you got to kind of put your 3D goggles on here when you're looking at this RSI because I got two different ranges on here, and one of them is I got the green dotted line, and then I got the highlight of green on both ends here, and then I have a red that kind of overlap each other, where the red is the bearish zone, where the red is highlighted. So the green area highlighted is the bullish zone, and the red area highlighted is the bearish zone. So I like to kind of look at these as overlapping zones to each other to know what kind of primary trend we're in and where the support and resistance is in the indicator itself to where it corresponds with the price. So let's kind of look back here. We'll kind of work through this chart, but right here, this trend line to the upside where we broke down. If you look closely down into the RSI, right at this point right here on this zone, and these lines are coming from areas that have previous historical support. So if you go back in history, you'll see where some support and resistance levels are, and if they match up with your trend lines on the chart, that's where you get these lines and these zones for the RSI. A lot of times when people look at 0 to 20, or kind of 25 or 30 to the downside, is oversold, and then 70 or whatever to the upside is overbought. But I kind of like to look at it as zones. So when it broke at this point right here and came up and held resistance, right at this point here, we were moving from inside this green zone into a bearish zone right in here, and the ADX was starting to drop for the bulls, and then the red negative directional index on the ADX was coming up, but then we went into this long period of not very much uh, you know trend momentum, because that's what the ADX measures here, the black line. It was really low and falling, and the bears were just trying to keep control here as the red negative directional index stayed to the upside. So right at this point, we dropped the RSI back into the bearish zone here, and then the ADX was saying, okay, well, the bears are kind of taking control here, but we kind of worked in this, it was whipsawing back and forth on some pretty big swings, but overall it was kind of sideways to a little lower. So what I'm watching for is this RSI to eventually break back out of this red zone that it's been trading in. And here's another time where the trend line right here broke to the downside. So this point right here, just like it was on the break here, was a nice resistance point. And this broke down, and then I look at this as an area of resistance. It's called critical support on here because we were currently looking at it as the 100% level of 6190 right here, and I'll tell you why here in a second. But this was actually resistance that when it broke out to the upside became critical support. But right at this point here, the RSI really dipped down low into the red zone, which currently is what roughly between 27 and 60. So it got down into that low area, and it started to pop up here and came back down to a low, and then you had a little bit of divergence back there against price, and then we were kind of off to the races here, or not off to the races, but we started to show a lot more bullish support. So, but if you follow the price here and you work your way up right at this point, and I'm showing this critical, right, this resistance point right here from the break point going down here. You're right at around that 61.90 on this break point, and it was right here where the RSI broke to the upside, or it got outside of the red zone and brought it back into the bullish zone. So you kind of switch it over to the green, and of course you're breaking critical resistance here to the upside. So you got a price movement that busts to the upside here, and it worked its way up, and now we're in this green zone. So this line right here becomes critical support. Now I kind of added some Fibonacci levels in here because it looks weird to start from here to do this leg right here on the weekly, but if you pull it out to a daily, you'll see where I get that from. And one of the things that I do is if it broke to the upside right here, this throwback to the critical support line is the next wave to the upside. So this low at 61.90 worked its way up to 90.94. Then the 61.8% level was this 7,300, which I was calling key support here, as we were basically the 61.8% level held here at 7,300 or so, and then it popped back up. So now you had another leg right here of this 100% all the way up to the 13.9, and then the 61.8% level became this 9,900 or so, or pretty close to 10,000, and kind of tested it a few times here and there, but never really broke because the momentum just wasn't there to get out of this area of consolidation. Because as it was trading in here, kind of it was really high for the bulls for one, and then it started to die off, and then the red negative directional index was coming in to give us a nice correction, which is a pretty large correction, but it was coming back down to this to what I'm looking at now is this trend line. And one of the things that I was looking at was a couple of things. If you broke this 61.8% level right here, the market came down and did a full retracement on this green, full retracement to 74.32, which was the start of this line. So you look at this area right here, a break here. This is a full retracement off of this area right in here. So a couple of things. We're right at the 61.8% level. We're right at the trend line from this lower area here. So this should be an area of buying support. And one of the things that I liked going into the last couple of weeks, thinking that this area would hold, is a couple of things. If you look back in here when it was making the lows, one of the things that I look at on the ADX is see if the positive directional index was going to cross down through the red negative directional index, but it did not cross right here. So that was my first sign. Even though the momentum was dropping for either one, it wasn't really giving a sense of direction. So there wasn't any momentum that was being built for the bears here. It was being built kind of in this point, but it never crossed. So that was kind of my first signal that this 61.8% or this full retracement level of after the 61.8% was broken here went to the downside. That was my first sign. The second sign was that the RSI, even though the market was dropping and getting oversold, it never broke out of this green zone. So it never broke back down below this green line, which would be the support in the RSI itself, to where if it would have went below this green line, we would be back in the bearish zone, or I'd have to highlight this area as red. But right now we're still in the green zone or the bullish zone. As we move forward. So without a cross here, without the support being broke here, and we're right on this full retracement point of the wave count that I had based off the Fibonacci levels that I use as support and resistance. This level was an area that I thought was going to hold, and that's why I told a lot of people to buy at 7,400 or so, because that was an area that should be tested. Now, of course, I had some tight stops on it. I was looking at stops at maybe 71.90, or it all depends on where you place your stops. Mine were going to be based on percentages, based on the book and or the trades that I have on the averages. But my stop was around 71.99. Never really got there because we bounced pretty quickly off this weekly candle, which has been great. So far that's what I'm kind of looking at. But the interesting thing is, here's another little trend line right here, and just like these other trend lines over here, you got this area of resistance. Interesting thing is, if you pull this, I put another long arrow out here. So if you look at where this resistance was back here on this trend line, it's the same area of resistance right here. So when this market came back up and tested right here, this is where a lot of sellers came into the market. But now here's a little, another little trend line right here. So it kind of broke at this point, and it went to the downside. So if you take this break point, it's right at the 61.8% of this move, right at the break point, and we kind of went up on this week. Of course, it wicked up a little bit of it, but you found some selling interest around this level. So right now, this is kind of this key resistance level, and then we got this key support level. Really, it's off this trend line right here, to where it's kind of creating this little triangle pattern. So anytime it's getting close to this trend line and we're still in this bullish area and we're getting bullish momentum, buying on dips toward this trend line is going to be a pretty good deal. And right now, the market's at 9,200, but if you go to kind of down to the bottom of this trend line, you're kind of looking at 78, 88, somewhere right around there. And then you got your 99.13 or so, or even your 10K on the wick. On the upside here. So this is kind of the range that we're looking at as we go toward this this triangle pattern. But right now, with the momentum where it's at, and the RSI and some other indicators that I look at, it looks like that the risk is to the upside right now. So I think buying interest is going to come in on this trend line and pop us to the upside. So once we break this 61.8% level to the upside, and we get a nice filtered break above it, this 13.9 of a previous high could come into play. But I could pop to a daily, but I don't want to make the video too long. But there's an area right in here off of this point that's right around 11,000, and then this point is around 12.3. If anything, we could probably get up to that 11,000 first, and then once we get up to the 11K, we'll come back down into this 9,900 area as support, and then we work our way up to 13. But right now, I'm looking at we're sitting right at an area of 9,200. If you looked at my previous video, we're right at an area where I feel you can find some buying interest. If not, then I would look toward the 79, 7,800 back at the bottom of this trend line to find some buying interest. I think we'll find buying interest all in that range, and then that'll keep us kind of pressured, or kind of a little bit of pressure on the sellers there to as the bulls kind of start to take control again. And break us out of this triangle and get us back up going further. So I know there was kind of probably talking your ear off, but I was just kind of showing you what I was looking at on some trend line breaks and how they correspond with some of the indicators that I look at, and how to use some of those trend lines where when you have a good trend line that breaks and it matches some indicators, those are going to be areas of really key resistance, like in this area right in here off of this break. Then you had this one right here, which actually became critical support as it wicked back down here, but held. And then just this little trend line here, you got resistance off of there. So right now you have this trend line. So if this ever breaks back and then works its way up again, then that will become resistance and we'll be coming into a bearish market. But right now, I like the bulls in control, and I like where we're headed. So let's keep this thing rocking and rolling. All right. Any questions, comments, concerns? And any questions on this chart or any other charts that I do or others do that you have questions? I could try to help you the best I can. I'm out on Twitter at FiboSwanny. Happy trading. Peace out.